Welcome back. This is India Market Open. We are taking stock of the futures and options space. It was a quiet expiry, the weekly option expiry of the Nifty yesterday. But, in fact, we didn't really see too much traction when it comes to futures space either. If you consider just the Nifty 50 at the moment, where what we are keeping an eye on is the benchmark. Again, marginal moves and very little to change as far as the Nifty futures open interest is concerned. The Bank Nifty futures, again, the picture wasn't very different, even though that outperformed the Nifty 50. A lot of short covering coming through to a certain extent. Of course, as we move into a new week, we are watching out for new levels. Yesterday was a day of trade where we did see a lot of writing around the 23,600 calls as well as puts. But even in terms of your overall open interest distribution picture, we continue to keep an eye on the 24,000 call mark as far as the Nifty is concerned. On the lower end, again, watching out for 23,200, 23,300, 400 levels as far as puts open interest is concerned. As we move into the new week, there are several stocks that we need to keep an eye on as well. A lot of them buzzing in the agrochemical space. In fact, we had GNFC and Coromandel International looking at fresh longs coming through, besides Tata Chemicals, of course. And even among stocks which saw unwinding, well, we did see Chambal Fertilizers, which advanced by as much as 19% yesterday. And besides that, we had India Cement, Bandhan Bank, ICICI Bank, and Indus Tower looking at a bout of short covering. But let's take this forward and take a look at what we can expect in the markets and how we in fact can use options to perhaps go ahead and trade here. Well, we have Amit Goel of Amit Ventures who's joining us on the show. Amit, morning. Thank you so much for joining in. I know that you actually have two specific strategies on the Bank Nifty, and this is under two different circumstances. Let's start with your overall view on the Nifty and the Bank Nifty. Maybe we can talk about the Bank Nifty later on. Just your view on the Nifty going forward at the moment.
Hi, good morning, Agam, and good morning to all your viewers. Thank you for having me here. We've had a stellar rally in Nifty right from the exit poll days. We have had a very sharp recovery, and right now we are at the top of a trending channel. The near-term support in Nifty happens to be 23,300 and 400 levels, with a fair bit of put writing over there. Since we are at the top of the channel, I'm a little skeptical in terms of initiating fresh longs, simply because we have noticed since last December, in the last 6 months of trading sessions, every time the Nifty tries to breach the upper channel, it has faced some resistance, and we have come back to the middle of the channel, which is at 23,000. So any bit of fresh longs to be created here will require some bit of confidence in terms of the price action, which I do not see really happening anytime soon. So probably we are in a bout of some sort of consolidation in the overall markets. Speaking about some of the sectors which are in focus, obviously we have all seen fertilizers, sugar, all the budget sensitive sectors seeing a lot of traction on account of positive news flows and speculation. One small advice for all the investors, all the traders specifically. Some of these stocks do happen to be in the F&O space and have seen very sharp run-up and some sort of short covering rallies as well. One would probably be a little cautious here in building fresh longs, simply because after such a sharp rally, if there is some sort of correction, which is par for the course in terms of profit booking, any fresh long created here would probably end up in a loss. So be a little cautious in the market is the mantra going forward.
Sure. Right, Amit. So let's talk about the Bank Nifty now. You have two different structures under different circumstances. I reckon that at this point in time, the 52,000 mark becomes important. Can you take us through that first structure that you're talking about here?
Sure. So Bank Nifty has uncharacteristically acted out of the way. While Nifty has been consolidating, Bank Nifty said, okay, I'm going to shoot up to the moon. We have had some spectacular rally in Bank Nifty. We have seen some sharp short covering rally with the 51,000 calls getting covered during the last two trading sessions. The question now is whether this rally will continue or not. The answer, in my opinion, lies in the 52,000 call OI. which currently is offering some sort of resistance along with the confluence of the daily super trend falling around that level. So the way I would want to play this is in two parts. It's a conditional bullish view. Suppose we break the 52,000 mark and we continue to trend there and we witness some sharp covering of calls and writing of puts at 52,000 levels. This would give me confidence to build fresh longs. So it's a conditional bullish view. Here, if we see this happening, we can initiate a bull call spread, a simple bull call spread for the next expiry, wherein we buy the 52,000 call and we sell the 52,300 call, one lot each of the 26th June expiry. The max debit is estimated to be about 2,000 rupees per lot, giving us a potential profit of about 4,000 in this trade. This is the bullish view. Now, speaking about the not so bullish view, if we witness some sort of selling pressure, like we have seen in Nifty in the last 3 trading sessions, that we open with a gap up.
Let me just stop you there. If you could just take a moment before we move on to your other strategy. I want to very quickly revisit what you have just mentioned. And this is, of course, under the conditions that you see the Bank Nifty move about the 52,000 mark and will sustain there under those circumstances. If you actually start witnessing a covering of calls and more writing of puts around there, that's when you in fact go ahead and will place that bull call spread. Again, as far as your risk reward ratio is concerned, if we can quickly revisit that as well, if I can have those graphics back on screen, it actually is a very favorable one considering the kind of traction that we've seen. So it's 4,000 per lot, and of course we could potentially see a big up move there as well. And considering the margin required is about 25,000 rupees, again, it does seem like something which is very positive with respect to your overall returns. But yes, Amit, you were telling me about the other aspect when in terms of if there could be some bullishness under that circumstance, what are you doing?
Yeah, so the way I'm looking at is, since we are also outside the trending channel in Bank Nifty as well, so I'm a little skeptical about the rally continuing conditionally if the call writing does not unwind. Now, the second way I would like to play this trade is, there is no harm in waiting for the data to come out before we set up a trade in the morning. So if we witness some sort of selling pressure or some sort of profit booking in Bank Nifty, which is par for the course after such a stupendous rally, and we see the 52,000 call OI instead of unwinding, getting added on during the day, we could probably consider the 52,000 mark as a near-term technical resistance. I'm not saying I'm becoming bearish. I'm just saying that it could become a technical resistance in the near term. And in order to capture this sideways expected movement, we could initiate a simple iron condor for the next week, wherein we sell the 52,500 call and we also initiate a sell on the 51,000 put, one lot each of the 26th of June expiry. We will also buy the hedges of a 52,800 call and 50,700 put. This will yield us a maximum profit of about just 1,500 rupees, since we are covering on both the sides by buying hedges. The max theoretical debit on this trade is 3,000 rupees with a margin of 34,000. Since the max debit in an iron condor is theoretically always greater than the max profit, we will initiate a rupee stop loss here of 1:1, keeping the max stop loss at 1,500 rupees per lot.
Okay. All right. But of course, the advantage of deploying an iron condor, that is, buying wings outside the strikes that you have sold, is that your losses remain limited. And even after that, Amit has actually provided you with a rupee stop loss so that your risk to reward ratio doesn't move beyond 1:1. Of course, that is under the circumstance that you do not see as much bullishness in the Bank Nifty, and the crucial level, of course, once again, even in this strategy, is to watch out for the 52,000 mark. That's what you have as far as the Bank Nifty is concerned. Two very sought out strategies as far under two different circumstances on the Bank Nifty. Well, on that note, Amit, going to take a moment to thank you for joining us and taking us through your views, and also actually providing two different options under two different circumstances. It's not something that we come across very often, but this certainly will be most appreciated by our viewers who are interested in trading the options market. With that, it's back to you.